I just got done with my trading and today I made just over $10,000 by taking one good trade on a really good playbook setup after this stock reported earnings with very high short float. So this stock had a combination of fundamentals because of high short float, technicals and tape reading, and we will be breaking down everything in this video. Let's start with the technicals of this stock. This trade I took was on W. So this stock reported earnings just before the market opened today. And this stock, if you look at the monthly chart, which is a very high time frame, we can see that this stock has been consolidating in between this range of around $28 to a high of around $76 to $80 for the past 1 year, more than 1 year, starting May 2022 to now August 2023. So that means we are stuck in between this range for more than a year. And now after the earnings, this stock was capping up above that range. Let's take a look at the weekly chart as well. On the weekly chart, we can see that we had a bullish momentum towards the upside recently. The prior week, we closed like a doji, like a bullish doji. And this week after the earnings, we were gapping up above the major level that we had, this major pivot level. High of this week is around 74.25. High of this week is around 76.35. And after the earnings, we were gapping up above all these levels. And that's why this trade is a playbook trade. On the daily chart, I marked all these levels. So I'm going to do one thing. I'm going to remove all these levels and mark them again. So if you go back and take a look right here, so we have a gap fill on this chart as well on this stock. This gap fill, if you zoom in right here, we have a gap on this stock. The gap starts at 79.21 and it ends around 82.21. So yeah, we have a gap fill as well. Gap fill again starts around 79.21. So I have this level marked already on my chart. The other level I was watching is this pivot high, which we made 3 days ago, which is approximately 78.11. So this is a really good playbook strategy. After the earnings, we have high volume, a news catalyst on this stock because of earnings, gapping up above a major level. So I was watching this 78 to 79 zone. If we hold this zone, I want to take this trade towards the upside because the next major level we have is around $90. ATR, the average true range of the stock is 4.72, but because of earnings, this stock can move 2 or 3 times the ATR. And the next major level is around $91 to $92. That's why as a day trader, we always need to think in terms of risk to reward. If I enter my position around $78 to $79, and if I catch the break of $80 for a push towards 85, that is my first profit target. That is insanely high reward to risk ratio. Reward is basically 7 to 8 times your risk. If you are risking, when you are trading options, if you are risking 50 cents on the option premiums, you can practically make $2.5 to $3 on the option premiums. So in basic terms, you're risking $50 a contract to make $250 or $300 a contract. And that's why this trade was a really good trade. It's capping up above a major level. We have a clear reference point. Personally, I don't like trading stocks where we don't have reference points. So for reference point, I mean that, okay, if I enter around 79, I have a clear stop loss. Sometimes we gap up in a no man's land zone. For example, if we were gapping up around say $90, then I don't have a valid stop loss. On this trade, even though we were gapping up 10 to 11%, I have a clear entry point, I have a clear stop loss, and I have a clear profit target. And all these things makes this trade a playbook setup. Let's now take a look at the 5-minute chart. So honestly, this stock had a delayed open. This stock opened around 9:33 or 9:34 a.m. It's pretty common for NYSE stocks to have delayed open, especially after news catalyst. They open around 9:31, 9:32. But this stock was delayed a lot. The options of this stock started trading around 9:33 or 9:34 a.m. So between this, we can see that pretty much low volume, 9:33 is the candle where we started trading. We had high volume. 9:34, I saw a dip to that 79.21. This is the previous level that I marked on the daily chart, and the gap fill starts at this level. We can see the low of this candle is 79.15. The next candle, when we held that level, I entered my position right here. This is a really good entry. As I said, I have a clear entry. Clear stop loss. If we get under 78, that is my stop loss. And if I catch the break of 85, the reward to risk is insanely, exponentially high. It's in my favor. My first entry was right here. I caught this whole push towards the upside. My first exit, I took 85 calls right here. I'm going to show you guys a screenshot of my entries and exits as well. But my first entry right here, then I took a bit of my position out right here. Then this $84 level was the pre-market high. If I add the extended hours, you guys can see right here, if I mark the pre-market high, this is the pre-market high level. And if I remove the extended hours now, off the open, had a push towards the upside, high volume. On the pullback, low volume. That means there is no major selling on this pullback. So this is just a bit of profit taking for people who enter right here. Like I took my profits right here. So these are pretty much people taking profits. Then on this pullback to pre-market high, we held this pre-market high, which is the level I just marked. I added to my position. This time I went for 90 calls, a bit out the money. I added to my position. and I got this whole push towards the upside. My last exit was at, I think, 10.07 or 10.05. At 10.05. My last exit was at 10.05, and after that we dropped and we just made a new high of the day. So I pretty much got the meat of the trade. I pretty much got the low of the day and high of the day. Then we pulled back and consolidated for the next 15, 20, 30 minutes. So that's not my strategy. Usually if I get an insane rally towards the upside, my premiums moved approximately 250 to 300%. So let's now take a look at the tape first. I will play a recording of the book map and show you guys what happened. And we will also take a look at the short float of this stock. So here's the Finviz website. We can see that the short float of this stock, W, Wayfair, is around 31.86. It's showing around $31 on Finviz. On some other websites, it was showing around 25%, which is okay. Anything about 20% is really high. And honestly, guys, I made this mistake. I saw the short float after the market opened up, after I was already in my position. I should have checked this short float because honestly, I wanted to take 100 contracts on this stock, but because the spreads were very wide and I was not aware of the short float, had I seen the short float of this stock before entering my position, I would have definitely sized up on this trade. So in theory, if I would have taken 100 contracts, I could have easily made $30,000 or $40,000 on this trade. But because I was not aware of the short float of the stock of the market open, I sized down a bit because this is a new stock after the earnings and the spreads were very wide. So my bad. Moving forward, if I see an earning stock which is gapping up and is looking really good on the higher time frames, it's always good to just take a look at the short float, because if the short float is high, that means we can see a short squeeze, not like an insane short squeeze like we saw in the days of GME and AMC when these stocks were rallying towards the upside. Those stocks had a short float of more than 100%. But in normal situation, anything more than 20% is very high. This stock has around 30%. That means if this stock gaps up after the earnings and it has a good push towards the upside, especially after it is breaking a range that we have been holding for the past more than 1 year, so the chances of having a short squeeze are really, really high. Let's now take a look at the recording of the tape and the book map of the stock and see what happened off the open. The reason I checked the short float of this stock is because off the open, I saw a lot of green right here. We can see that we held the $79.2 region right here and we saw so much green. So green doesn't mean that people are buying, honestly, because there's a buyer for every seller and there's a seller for every buyer. Stock market is a market at the end of the day. You won't be able to buy if you don't have anyone to sell and to get the shares from. Same thing, there's a seller for every buyer, there's a buyer for every seller. But the main thing we need to notice in the stock market is that which side is getting aggressive. If the buyers are getting aggressive and they're absorbing the ask price, the price will go up. If the sellers are getting aggressive and if they are able to absorb the bids, then the price will go down. That's what we need to see. We need to notice the market imbalance between the buyers and sellers. Off the open, we can see that the buyers are getting aggressive. We can see a lot of green. Honestly, I haven't seen a book map like this in a very long time. Barely any red. Like people are barely hitting the bid price. Everyone is hitting the ask price. Most of the traders who are taking this position. So this basically means that people are buying. First of all, that is okay. But because the short float is really high, those people who are short on this stock, they are trying to cover their position because they get margin calls and everything, right? So they are trying to cover their position. So if you're short on a stock, you need to buy your shares back. That's what the margin call means. Short float is not that high. 30% is still high. It's not as high as like GME and AMC. Those stocks freaking rallied like 500%. But this stock, still it's comparatively high. So people who are short, and if they get a margin call, they will have to buy back their shares. And that's why it creates more buying momentum towards the upside. Even the brokers, they will exit your position. If you don't have enough money in your account to support your short position, the brokers have the right to exit your position at the market orders. So this is basically that thing happening, and we saw a crazy rally towards the upside. It just made a new high of the day. And that's why this stock just makes it a perfect candidate to be a playbook setup. Holding a range for the past 13, 14 months, gapping up above a major level. With high short float, we have a very clear entry point, very clear stop loss, very clear exit point. If I have all these criteria satisfying on a trade, that just automatically makes it a playbook setup. So let's now take a look at my entries and exits, guys. My first entry was on AMD. That was a losing trade, a small loser. Then my W entry, first entry was at 9:35 a.m. I wanted to add to my position at 9:36 a.m., but I was not able to get filled. I was trying to get filled on the mid price because the premiums were very spready off the open. And my first partial was at 3.7. So just to put things in perspective, if you invest $170, after the next 7 minutes, your $170 were around $370. And my last exit was at $420. That means you invest $170. That is not my risk. My investment is $170. And my last exit on those same premiums were $420. My risk was around, I would say, $30 to $40 a contract. I entered at 1.71. I would have exited my position, worst case scenario, around 1.20. So basically, I was risking 50 cents a contract, and in return, I made around $2.5 a contract. So you guys can calculate the risk to reward for yourself. You're risking 50 cents, worst case scenario, to make 2.5. Best case scenario, I was risking around 30 cents to make $2.5 a contract. So yeah, that's it, guys. If you guys have any questions for me, let me know in the comment section below. And if you like this video, give this video a thumbs up. If you guys don't follow me on Instagram, I already posted about this trade on my Instagram. So go give me a follow there. Thank you for watching, and I will see you guys in the next video.